With just over 30 minutes to go before the opening bell, we want to bring in Megan Horneman. She is the CIO at Verdence Capital Advisors. And Megan, we've got a lot of things happening this week. You've got the Fed, you've got what's happening with earnings. Why don't we start with the Fed? Because you say there's a really big difference between what the Fed should do and what you think they're likely to do. What is that?
So unfortunately, they took a bit more of a dovish tilt in their prior meetings and some of the speeches that we've heard. And we think that it's just a little bit too soon for them to be taking that dovish tilt. I think that they should actually get a little bit more hawkish and realign some of the expectations for interest rates this year. There's just way too much optimism on multiple interest rate cuts this year, and we just don't see that on the horizon.
Okay, so that means the Fed will have to do what on Wednesday? If you have to acknowledge the data, and the data shows that inflation has come down pretty sharply, how do you do that and not signal to the market game on in terms of rate cuts come March?
Right. Because I just don't see, yes, inflation has come down. It's improving quite a bit. It's coming in the right direction. It's getting towards that 2% target, but we're not at that 2% target yet. There still is room to go here, that they have to get inflation down. And the biggest concern that we see is that they could reignite inflation by getting too dovish and not realigning and setting expectations for what the rate cuts will be.
We've seen a pretty incredible continuation of the rally in January. It didn't stop after the Santa Claus rally, and there were a lot of people who thought maybe it would. Does this make you nervous at this point, especially if you think the Fed is not going to be able to cut rates as quickly as the market's anticipating?
Yeah, we think, again, January seasonally can still be a good month. It's up about 60% of the time, on average about 1%. So it's not significantly surprising, especially given the fact that there's been so much optimism about the economy and optimism about the Fed's going to come in and cut interest rates as quickly as March. We are concerned. We think that valuations are a little heavy here. We would be looking at some of the areas of the market, the large cap area, especially the growth side. Make sure that you're not overweight in portfolios, balanced portfolios, because it has run so far and so fast, and we do think it's at risk of some sort of a consolidation here.
Megan, thank you very much for joining us today.